Ladies and gentlemen, today is September 1st, 2021, and I'm back with another edition of the Wednesday live show. And hopefully, the show player's working okay and you're seeing it live. If not, you can catch the replay as usual. Let's see, we're headed into the Labor Day holiday weekend, and we just closed out August, obviously, which was amazingly, August was a pretty good month for the market. And man, we've seen so many new highs. It's just incredible. And the funny thing is that, the market just keeps making sort of nominal new highs. And, a lot of people are skeptical about it, myself included, but it is what it is. And so everybody thinks that the Fed is going to continue to be relatively dovish and keep pumping money into the system. And the funny thing is that right now, some of the signs, the economic data is pointing to a potential slowdown, and so it's almost like they've waited and waited and waited so long, and then what's likely to happen is that the economy is going to slow down just in time for them to think they should start tapering. So who knows what that'll do. But as I always like to say on the show, objectively speaking, we just look at the chart and the trend of the market and the trend line. So, I've played around with a lot of different trend lines, um, over the past year since the March low, the pandemic low, I like to call it. But anyway, so most recently, this is the trend line that I think is most relevant at this very moment. And it basically, it goes back to the November low of last year. And I haven't actually extended it down here to see where it intersects, but the main thing about this trend line is that I think that's kind of a relevant starting point anyway, because you had sort of you had a new, I believe that was a new high, and then sort of a sell down, like a double bottom there. Anyway, that's where the market really took off and started this rally. And a couple of close touch points here. If this trend line was like really super thick, it would touch all these lows going back to last November. So that's a pretty solid trend line. I mean, it goes back a year, actually almost a year. That's what I'm saying. Almost a year. So, give or take a couple of months. But anyway, so long story short, as I've been saying, as long as the upward sloping trend line, no matter how you have it drawn, as long as that's intact, then it's tough to fight the trend. You don't want to fight the trend, quite honestly. So that's just the way that it works, right? You got an intact trend line, and so I don't know what it's going to take for the market to sell down and violate this trend line. And I'm not talking just, a couple of pixels or, a day or so, but I mean an actual, sell off that breaks it. But, hey, it could happen at any time and it could happen very quickly. The funny thing is that if you go back to the pandemic sell off, right? Um, it's kind of interesting. Travel back in time here to this pandemic sell-off, but what I wanted to point out is how quickly it transpired, right? So leading up to it, the market was, on the same sort of a tear that it is now, just basically straight up, straight up, straight up, and and um and so it peaked out. And the funny thing is, it's just a little review here, but the funny thing is we started hearing about the pandemic in China and the coronavirus, all that type of stuff over here, and got this little sell off, and then the market didn't care, but then all of a sudden when it started selling off, I mean, look at that. That's 2, 4, 6, 7 days. So basically the market lost 6 months of gains roughly in like 6, 7 days here. right? And so anyway, it's just something to keep in mind. And then of course, there was the first big bounce and then sold off, and of course we know what happened after that is, eventually we bottomed out, and the Fed this day right here, and then the Fed came in with both barrels, and they lowered interest rates to zero, and they threw a few trillion dollars in liquidity in, and so there's the rest of the story. So the Fed came to the rescue, and now here we are. All this time later, um, here we are, right? So anyway, my point is that yeah, you got this trend line, the trend's up, the market's every single day everything's fine, but when when something comes along that spooks the market, you either get a little bit of a dip or a pullback, temporary, or you could get that's pandemic sell off was 35%, right? So anyway, let's move on here. The Qs, I got this trend line drawn on the Qs here, which seems to make sense, and I mean they have like really pulled away. Oh, my charts for whatever reason, and I'm not even sure, but I have like a couple different themes here, and what I've figured out is that when I draw something on the chart, I have to save it to a watch list, and then if I change anything on that, I update that chart in the watch list, and so as I click through the watch list, then all my marks on the chart stay intact, which is perfect. It took me a while to figure that out. At first, I thought, well, like the Pfizer, right? I went through all these fits and starts on this because every time I marked it up again, I'd hit save, and then so what ended up happening was I had like 10 saved charts, all of Pfizer with a different mark on them. So it took me a while to figure that out, but anyway, this is the most recent close trade here. So moving back to the Qs, very, very extended. Huge move off of the lows, and so it's when it gets this extended from the trend line, you kind of have to get a little bit cautious, right? So I've seen things on the internet describing how the market is the most overvalued in history, based on certain metrics. I believe that GDP, like market cap to GDP, the market is actually higher than it's ever been. The 1929 or 2000 or whatever. So that's something to think about. But anyway, so let's dig in real quick. Like I said, this Monday the market's closed for a holiday, and so it's kind of a quiet week here, although we do have a new month starting, but I expect things to be relatively dull the next couple of days, and a lot of people, I've always expected that after the Labor Day holiday, you get through that week and then the action starts to pick up. So quite honestly, the market going up every single day, it gets kind of boring. It'd be nice to see some two-way action, right? So that always makes things more interesting. But the market just goes up every day. I mean, yes, hey, that's great for indexing and that type of thing. But there's the whole idea that under the surface of the market, if you look at the Russell 2000, it's still like pushed right up against the highs, but it's 2,000 stocks compared to the Nasdaq and the S&P or whatever, but the smaller stocks, they're kind of just been trading sideways most of the year. Now they are, approaching, they're a little higher than the middle of the range, but by no means is the Russell 2000 like in melt up mode like the other ones are. So maybe that's a warning sign. Maybe that's just a function of how everyone's gravitating to, a handful of larger cap stocks. So anyway, so let's look at a couple things. First one we want to look at is Kroger's, which is which is our open trade that's been open for a while, right? Triggered triggered back here, um, triggered back here in mid-July, made a pretty good move, and we've been able to stick with it, this whole time, right? And this last little sort of breakout leg up was pretty nice, to be honest with you. It happened really quick, and so now, as we speak here, the trailing stop has moved up to basically right under the last pivot low. And so the big question, well, not really the big question, but um, the stop's pretty close. And as you can see, we had that pivot low and one up day, and now it looks like it's fading. And so what remains to be seen is whether in the next couple of days we're going to tag this trailing stop and finally be out. So no big deal, because I believe as of yesterday's close, Kroger's was up. Let me check this real quick. It was up around 19%. Yeah, 19%. So anyway, you can see the target was way back here, because typically this stock didn't move a whole lot. It had a relatively low ATR, but this latest run here has been extraordinary. So far so good on Kroger's. Really nice. Look at that. It reminds me of the Nasdaq a little bit, right? Kind of a nice meandering trend, and then it just literally went parabolic. So, and the beauty of the system obviously is, we have a target where you take partial profits and then you ride the rest up with the trailing stop. And the trailing stop tightens up and ratchets and gets more aggressive as time goes on and as the stock moves higher. So basically, it's basically protecting the profits just under the last pivot low. And so, you look at this today and you're like, and anyway, I look at this and I think, well, yeah, that's most certainly going to get taken out. But you can look back here, long range move, a few days of a little pullback, and then another leg higher. So anyway, there's a happy medium between protecting gains and keeping the stop far enough away that you don't get knocked out on normal fluctuation. But you do have a lower high so far, and so if it makes a lower low, then probably a good time to just bail on this and move on. Speaking of which, we have a brand new open trade here that's triggering in this morning. And the funny thing about this is that it just hit the list a couple of days ago, right? It was sort of setting up. I have a 50-day moving average on here. That's the blue line, but anyway, it was just setting up, and and then for whatever reason, I don't even know what the news was or the deal was yesterday that sent it, like, I think it was up like 2 or 3%, maybe 4%, something crazy like that. Um, it was strange. It was really strange, because the way that the trigger was set looked like, it was gonna maybe take a few days, whatever. I was expecting like maybe next week, if it continued to rally up above this resistance, that it would potentially trigger in. So anyway, what we're looking at here today is a great example of what I've talked about a lot of times, and that is, that you can take the entries in multiple transactions, right? I wanted to zoom out on this chart. Longer term chart's got a pretty good look to it, really. I'm not sure what that dip was all about, whether that was earnings or whatever, but it's got kind of like that, it's got like that little W looking pattern and this consolidation and that breakout, and so it's looking pretty good here. I kind of like it. As far as taking the entry, obviously the standard entry is just a close above the trigger line. Um, get in around the open the next day, which would be way up here, or as we've discussed before, many times. If you get a gap up, in which it basically did, so it gapped considerably over the entry. And so the other option is, there's actually a couple other options. One is you just set a limit order at the trigger price, and the low today is actually like a penny below. So setting a limit order at the exact trigger price, you would have got filled. The other option, but the problem with that is that sometimes they'll take off and never look back, and you won't be in. So the other option, which makes a whole lot of sense, is you take a half a position near the open and you set a limit order to get filled on the other half of the position at the exact trigger, in which case that way you get kind of a nice average cost per share that's in between the actual trigger and the gap. So anyway, so that's that. So Walgreens, over here on the triggered today list, you'll see that you'll see it triggering in. You'll see target stop. Excuse me, the average range over here, just a couple of percent. And so that's that. So we got Walgreens kind of, had that big long range day, and now it's given back a couple of percent, which is kind of interesting because, typically the 30-day average range is 30-day average range on this is like, a couple of percent. And here we are with, a 4% up move and a 2% pullback. And so I didn't look to see what the news was, to be honest with you, why it rallied yesterday, but wasn't earnings, obviously. So we'll have to see. You can see target up here. This stop seems really tight to me as far as like where the price has been. In theory, I would have kind of imagined the stop being below this pivot low, but I guess with the long range bar there and the way it triggered in, um, keeping a really super tight stop on it. So, and then of course, there's one more pending stock, right? Twitter, which you can see the last trade over here, the last swing trade in Twitter, triggered in, trailing stop. I would have had all the trailing stops like marked along the whole way, but at the back here I hadn't figured out how exactly to save them properly, and so now that I've figured that out, I'm feeling a lot better about how to do this. So anyway, I haven't marked the entry on here, but it's going to be all about today's close, right? So the trigger price on this is, somewhere right around where it is now. But you can see that it rallied and is starting to fade a little bit. And so it's going to be interesting to see what the close looks like, whether this actually triggers in for tomorrow or not. And so if for some reason, and I don't know if there's any news on this or whatever, but Twitter's been on the pending list since, let's see, pending trades, triggers Twitter, tongue twister, since 8/24, which was back over here. And it's got a pretty nice little pattern going here, to be honest with you. It's got this nice sell down, the first bounce, a little bit of a retracement, lower high, and now it's starting to come back up. So it's going to be close, put it that way. It's going to be really close. If it maintains this strength, then this will be another open trade. So that's that. So we have two open trades. We have one pending that's potentially going to trigger in for tomorrow, and we have a holiday weekend ahead of us. So I expect the next couple days may be a little bit slow. I'm not sure what to expect. So what I may do next week, I've also, there's a few other stocks that look really interesting, and they look like they could potentially be setting up. And so maybe next week on the show, I'm assuming that some of these may actually hit the pending list. So The thing about the pending list, over the years we've seen like a huge, 10 stocks pending, and there's been times where there was no stocks pending. And so, a lot of it's a function of the overall market, because what we don't want is, like, 10 stocks to trigger in right before the market has a significant pullback, which, could be coming at any time. And so the system tends to be more aggressive after we've had a market sell off, and less aggressive when the market's just up at the highs without any sort of a pullback. So we'll have to see what happens. So anyway, I planned on doing kind of a relatively short show today, just because there's not a whole lot going on. I mean, we've only got like 3 stocks that we're really sort of focused on here. And so, headed into the holiday weekend, I think things may be relatively dull, but you never know. So anyway, thanks for tuning in. I'll see you guys back here next